Stock Tip. Best stock setups.
Welcome to a new episode of Stock Tips Daily Update. Actually, this is going to be a weekly summary. We're going to discuss the happenings of this week, and as you've seen, something happened this week. Basically, the market just broke down. This won't come as any surprise to most stock tip viewers because for a couple of weeks now, I've been mentioning daily that the strategy to be taken would be to just hold on your cash positions. Cash is king. These were my words the whole time. Cash is king. Don't do anything crazy. And don't try too many swings. It's possible that the market is going to crash and burn, and your portfolio also with it. And now we've seen it. We've just seen it the last couple of days. For us as stock tip, it wasn't such a bad week. Actually, it was a very profitable week, and since the last week of December, we are at a comfy 10.5% profit, 10.5% whole portfolio value, and that's more than I can say about most traders out there. Now, what's going to happen next week? Well, there are a couple of possibilities. I think we've seen after 7 days down, I think the next obvious step would be a bounce back to this support level in the SPY 450. That would also be where we would meet the 9-day moving average. The cues that would make perhaps for a bounce back to the 200 moving average also would probably meet the 9-day moving average. I think this is very possible, very probable, and anything else like a complete breakdown, I also think this is going to happen, but I think the next step is still going to be a bounce. Why do I think that? I have many arguments for that. If you take a look at the SPY, we've basically reached a 200 support line, and this has worked as a support line and as a bounce historically here. Not there. Here, more times here, another time here, another time here, another time here, another time here. So historically, seen this has worked as a bounce, and not just that, but consider our move here. We are in the last 7 days. We are 8% minus, and we have such a vertical move. Such a vertical move is usually followed by a small bounce to the 9-day moving average. If you take a look at the Nasdaq, we've also fallen 10% here, 10% in a week, and again, just vertical, no consolidation in between. I think this is just the logical step, the logical next step. Another argument would be the IVM, where most of our stocks lie actually. So IVM is the Russell 2000, is the ETF in which I trade the Russell 2000. So the biggest 2000 stocks, the smallest 2000 stocks, but still 2000 of them, 2000 titles. This is a big weight for the stock market, and 2000 of them are in here, and we've basically just reached our calculated measured move here. This was the first move down here, and basically today we've just reached our target here. This is basically the second move down, and I think this is the completion of the second move down. We've also broken out of this support line, so broken down out of this support line, and again, the next logical step would be a pullback back to the support line, which would pretty much confirm my theory for the other two. Of course, it's possible that this doesn't happen, that we fall absolutely surprisingly down and down and keep falling until someday when we reach the next low, perhaps here the next time we reach the 200 moving average, but more probable here 170. We'll just have to wait and see. It would come as no surprise if this correction or crash would bring us in the SPY in the S&P 500 in this range, 355. Because if you take a look at our history here, the 200 weekly average has been basically our support for the last corrections here. This was a crash here in the beginning of the Corona crisis, so this doesn't count as a correction. This was a crash. And 2018 was also a crash. I think it's here, but I think this would make for a probable first step. 355 looks pretty realistic, or 360 looks pretty realistic. So that's my take on the market and on our targets and our next targets. There are many things to consider. I rely purely on technical analysis, and if you take a look at the biggest titles in the S&P and in the Nasdaq, which make out perhaps 20%, 15 to 20% of the whole Nasdaq and S&P 500, you see the biggest titles here. Apple, which has broken down out of this consolidation here, consolidation out of this head and shoulders formation here, has broken down. Then you have Twitter on a descending, clearly descending trend, so 50 descending, 20 descending, 9 descending, and moving in parallel, not oversold, not at all. Then you have Amazon with the worst days, worst 2 days here, in which Amazon has lost a whooping 10% in just 2 days, and reached one of the last remaining support lines that will perhaps also be broken the next couple of weeks. Then you take a look at Google, also just breached the 200-day moving average and the last support line, and you see Adobe descending trend, 50, 29, all descending, and now also the 200 line descending. You see Netflix with a 22% drop just this last just today, actually, because of I believe this has something to do with the earnings that they've posted after yesterday's close, and Nvidia also with test of the 200 support line. So all of these titles, the biggest titles, and the American titles, they all look very bad. For if you just consider the technical analysis, I don't pretty much care about the fundamentals. I only look at the charts, and at the moment the next moves are coming from the charts. So if they all look that bad, they are going to pull the whole market with them. But perhaps first we'll have a nice bounce here. Amazon also looks like it's asking for a bounce to the 9, and Apple also looks like it's asking for a small bounce here before it continues its journey down. Actually, that's something that I count on, because as of today, as of these closing hours, I have opened idiotically, perhaps not, perhaps it's a genius move, 2 small positions on the SPY and on the Qs, 2 small long positions, thinking that we are going to see a nice a nice pullback to the 200 here, respectively the 9 in the SPY. We'll see if this pays off. If not, I've just lost 1.5%, I think 1.5% out of my portfolio, thinking that my next stop would be here. I haven't placed a stop. This is something I rarely do, but I haven't placed a stop yet. I will just see what Monday, how we will start Monday. If it's looking that bad, I will stop this trade, but just wait and see. I think I'm right. And then let's look at a couple of trades we've made here. Stock dip, as I've said, we are 10.5% up since the last week of December, so the last month, so to say, and this is no wonder. We've made a really nice profit on this side, and I'm going to go in the 50-minute chart and show you better. And then we've profited from this bounce here, and you see this here. This was our initial entry with our initial stop, and I think this is the point where we've taken our, this is the point where we've taken our first profits in the SPY, and the point where we got closed. So here, just beneath the gap. But not only that, we've pretty much changed directions here, and we've shorted the SPY with a stop here, and we've closed the position here. And this was our short in the SPY, so first our long in the SPY and then our short in the SPY, and just the long brought us risk-reward ratio and fulfilled reward, so to say, but we've taken 4.5 times that what we've risked, and on the short side 7.5 times that what we've risked. And the same, we've did absolutely the same, and simultaneously in the Nasdaq, with an entry here, a stop here, and first profits I think here, and the closure, the stoppage of the long here. I think the second, I think in the Nasdaq I've taken profits pretty much at the top of the gap, and then the rest of the position was closed here, and I also switched directions, and I finally closed the position here. So this has brought, the long action has brought me 5 times my initial risk here, and 8 times my initial risks here. So a nice move. Also, I got a little bored today, and I've seen this formation here, this triangle, also in the SPY, and decided to do a little day trade today, and pretty much closed in a very small profit, but still, nonetheless, profit, and not a less. So I didn't want to go to leave a short over the weekend, thinking that we most definitely are due for a bounce. So that's my argument here. So you can find all these trades nicely pictured on our website, stock-tip.com. I think they are directly on our homepage in the gallery. Take a look at them, see if you like them. If you do, write it. If you want, write it down in the comment section here on YouTube. You can find many more there, like some scans or setups, and that's our next point of topic here. I have one remaining position, one remaining active position, and this is IRTC. I've taken the first profits here, and I've pulled the stop at 117. If anything happens, I remain with another third of my profit, so I would lose one third of my overall profits if I get stopped in this trade. I hope not. It's a very nice trade, and I've actually planned it as a position trade. You see here, and if it manages to resist the correction, I wasn't thinking of the correction at the time. I didn't want it to happen, but it happened. If it resists this correction, then 300 would be a possible target here, but we'll just wait and see if it gets hit or not. We've also given you some, or our avid stock tip followers, some nice setups, and the ones that did break out, for the ones that did want to do some swing trades in this market, in these waters, then they turned some profit. Actually, none of them, or better yet, all of the setups that have broken out have brought profits, or haven't brought any real minus. They've all given the opportunity to close a trade at least with plus minus zero, if not in profit. So to take a look at ESM, I've missed out on ESM. This was one of my dearest setups, which I followed for weeks in a row, and as it came, I've missed out on it. I wasn't really upset, because I tried to get a pullback here, only to get stopped the next day. So this is where I tried to get a pullback, and with a stop here, and I got stopped the next day. And then this happened, and again I wasn't paying attention. I was busy with my shorts and my longs, and this was a very nice opportunity, and some of the stock tip followers have taken it. This was the risk, so a stop here, an entry here, and just above the last red candle here, and at the point of this gap, I think the ones who've taken this have made 4 times their initial risk, so a very nice profit. And if they haven't taken any profits on the way, then it's their fault. That's not how trading is done. CTXS, also a very nice setup. This setup, I've given you this setup on Monday. On Monday's edition, on Monday's stock tip episode, and this I've given freely on YouTube to get with with a couple of other setups. Take a look if you wish to. This was a Monday's episode, and it just broke out, nicely done, and still holding above the support line. So perhaps not a title in which you can take any profits. Not yet, at least, or you may have done so if you didn't take this breakout here, but waited for the pullback here. Then with a stop here, you've definitely been able to take some profits. If not, don't forget to place your stop. I wouldn't let this trade go beneath 98.8. This would be a no-go for me. Easel is another setup we've given you, and this too has broken out after this very nice consolidation here. So we've had 1, 2, 3, and the 4th touch was a go. And again, I would place a very aggressive stop here. Perhaps if we didn't have the current market situation, I would place my stop here. But given the times we live in, I think the stop, the more aggressive stop, like stop underneath the breakout candle, is the way to go. This would leave you with almost non-existent risk here, and all the possibilities to still make a profit here. Just look, this would be your first target, this would be your second target, and you're already 4 or 5 times up. and MGI is the last setup we're discussing today. Also a very nice performing setup, one of my dearest, which I've mentioned on YouTube last week. A very nice setup, and this has given some profits here. Perhaps it just depends on what you do. But I think here at the top of this candle, you should have taken profits if you've taken the setup, and if you're in this trade. If you're in this trade, then or in any of these trades, then congrats. You should be proud of yourself, considering the market conditions. Then you've chosen the right setups, and you've chosen the right partner to give you the setups. By that I mean stock tip. So all these setups and many more scans you will find on our website stock-tip.com. Don't forget to visit. I think that's all for today's video. I can summarize and talk and clear out what our strategy for next week is, and that is pretty much to wait for the bounce, and after the bounce comes, and the bounce is imminent. Given the current situation, after the bounce comes, I think the market is going to continue south again, and when it does, we will be in standby waiting for a nice entry on the short side, and that's all that matters at the moment. A nice entry on the short side, and continue raking in the profits in this correction. That's our goal, at least. So don't forget, stay cash, or try to avoid too many crazy trades, and save your cash for when the market is going to come out with a recovery, hopefully a V-shaped recovery, and then we can really enjoy some nice profits, not just this very difficult ones during the correction. Okay, thanks for joining me today. If you have liked this video, don't forget to like and subscribe, and if you have any questions, leave them in the comment section. The links I've been talking about, you'll find them in the description below. That's all. Thanks for joining me, and hopefully I'll see you next week again. Bye.